Hi, this is part 2 of the video series for payment certification process in FIDIC forms of contracts version 1999 edition and 1987 edition. Okay, now in part 2 we will discuss what subclause 14.1 says. 14.1 The contract price. Unless otherwise stated in the particular conditions, A. The contract price shall be agreed or determined under subclause 12.3 evaluation and be subject to adjustments in accordance with the contract. According to subclause 14.1a, unless otherwise provided in the particular conditions, the contract price shall be agreed and determined as per the measurement provisions in subclause 12.3, which is evaluation, and also subject to further adjustment in accordance with the contract. Adjustments means primarily under clause 13, variations and adjustments during the contract. The meaning of this is that the contract is a remeasure contract. The contract price is defined in subclause 1.1.4.2 as the price defined in subclause 14.1, the contract price, and includes adjustments in accordance with the contract. And again, the contract price is subject to adjustments in accordance with the contract. Those adjustments will be the ones in clause 13, which is variations and adjustments. But again, it will also include automatic changes in the quantities, which we refer as automatic variations, where a change in quantity is simply due to the inaccuracy of the bill of quantities where no engineer's instruction is necessary. Therefore, we cannot say that the contract price is fixed. In the FIDIC 4th edition, which is FIDIC 87, contract price was defined as the sum stated in the letter of acceptance, which we refer as LOA in practice. In FIDIC 99, the amount accepted in letter of acceptance is the accepted contract amount and is defined in subclause 1.1.4.1. The accepted contract amount is different from the contract price. Accepted contract amount is fixed, but the contract price is subject to change due to the variations and other adjustments. Both accepted contract amount and contract price are defined in FIDIC 99. In the FIDIC 99, the contract price is agreed and determined in accordance with the measurement provisions in subclause 12.3. Further, it requires the engineer to agree or determine the contract price in accordance with subclause 3.5, which is determinations, by evaluating each item of the work using the measurement agreed or determined according to subclause 12.1 and 12.2 and the appropriate rate or price for that item. When we read any standard form of contract, we usually read only the general conditions of contracts, but it is equally important to read the particular conditions too. FIDIC 1999 has an important section called Guidance for Preparation of Particular Conditions. In that, let's see what it says about subclause 14.1a. FIDIC 99 Guidance for the Preparation of Particular Conditions. Subclause 14.1 The Contract Price. When writing the particular conditions, considerations should be given to the amount and timing of payments to the contractor. A positive cash flow is clearly of benefit to the contractor, and tenderers will take account of the interim payment procedures and when preparing their tenders. Additional subclauses may be required to cover any exceptions to the options set out in subclause 14.1 and any other matters relating to payment. Cost plus contracts, under which the actual costs are determined and paid, are unusual and only used when, for reasons of urgency or otherwise, the employer is willing to accept the risks involved. If the contractor is to be paid actual costs, Clause 12 should be replaced by provisions describing the method of determining the costs and prices. As a result, the provisions in the general conditions which entitle the contractor to payment of additional costs will generally be no effect. Even the FIDIC highlights the importance of a positive cash flow to the contractor. So FIDIC suggests to use additional subclauses to cover any exceptions to the options set out in subclause 14.1 and any other matters relating to the payment. As an example, in cost plus contracts where the actual costs are paid, clause 12 should be replaced by provisions describing the method of determining the costs and prices. In such case, the provisions which entitle the contractor to payment of additional costs will generally be of no effect, because in cost plus we will reimburse all the costs. Remember, it's clause 12, measurement and evaluation, not clause 14. Further, FIDIC says cost plus is only used when there is an urgency or otherwise if the employer is willing to accept the risks involved. Now let's see what FIDIC says about clause 14 in lump sum contracts. Subclause 14.1a would not apply if payment is to be made on a lump sum basis. Lump sum contracts may be suitable if the tender documents include details which are sufficiently complete for construction and for variations to be unlikely. From the information supplied in the tender documents, the contractor can prepare any other details necessary and construct the works without having to refer back to the engineer for clarifications or further information, further designed by the contractor under subparagraph A to D of subclause 4.1. Contractor's general obligations is not precluded. However, these conditions would be inappropriate if significant design input by the contractor is required. In those cases, FIDIC's other forms may be more appropriate. See FIDIC's conditions of contract for plant and design and build, or conditions of contract for EPC turnkey projects. For a lump sum contract, the tender document should include a schedule of payments. See subclause 14.4. And any drawings required for construction may be specified as being contractor's documents. The specification should describe the procedure under which the contractor submits these documents for the engineer to approve. As I said before, clause 14.1a is for remeasure contracts. Therefore, it says in lump sum contracts, this subclause 14.1a would not apply. Not only that, FIDIC advises you when to go for lump sum contracts. Lump sum contracts may be suitable if the tender documents include details which are sufficiently complete for construction and for variations to be unlikely. Also, it says, from the information supplied in tender documents, the contractor can prepare any other details necessary and construct the works without having go back to the engineer for clarification or further information. That means in lump sum contracts, the information supplied with tender should very much clear to the contractor. Therefore, if there is a significant design input by the contractor is required, these conditions would be inappropriate. There are other FIDIC forms we can use for those situations, such as FIDIC's conditions of contract for plant and design and build, or conditions of contract for EPC turnkey projects. Further, in lump sum contracts, there should be a schedule of payments included in the tender documents as described in subclause 14.4. Subclause 14.4 we will discuss in detail later, and also if any drawings required for construction that can be specified as contractor's documents. The procedures for submission of these documents to the engineer's approval can be described in the specification. FIDIC not only advises about lump sum contracts, but also gives example provisions for lump sum contracts. First of all, it says delete clause 12, measurement and evaluation. Delete the last sentence of subclause 13.3, which is variation procedure. The wordings to be deleted are: each variation shall be evaluated in accordance with clause 12, measurement and evaluation, unless the engineer instructs or approves otherwise in accordance with this clause. Because if we deleted clause 12, the variation evaluation has to change. Therefore, it should be substituted with these wordings. Upon instructing or approving a variation, the engineer shall proceed in accordance with subclause 3.5 to agree or determine adjustments to the contract price and to the schedule of payments under subclause 14.4. These adjustments shall include reasonable profit and shall take account of the contractor's submissions under subclause 13.2 value engineering if applicable. As we discussed, subclause 14.1a also not applicable for lump sum contracts. Therefore, it is suggested to delete subparagraph a of subclause 14.1, which is the contract price shall be agreed or determined under subclause 12.3, which is evaluation, and be subject to adjustments in accordance with the contract. Delete this sentence and substitute it with: the contract price shall be the lump sum accepted contract amount and be subject to adjustments in accordance with the contract. Now you can see that unlike in remeasure contracts, in lump sum contracts, contract price is the accepted contract price. Subclause 14.1b says that the contractor has to bear the costs of all taxes, duties and fees. This is repeated in subclause 1.13, compliance with laws. Unless there is no change made in the particular conditions, recoverable time and costs are limited to the amounts of changes in legislation under subclause 13.7. The contractor has to give notice of such changes. The guidance for the preparation of particular conditions has the example clause if the contractor is to be exempt from paying duties. Remember, these examples are for exempting the contractor from taxes and duties. This has nothing to do with the changes we discuss for lump sum contracts. It says, if subclause 14.1b is not to apply, additional subclauses should be added. Example subclause on exemption from duties. All goods imported by the contractor into the country shall be exempt from customs and other import duties if the employer's prior written approval is obtained for import. The employer shall endorse the necessary exemption documents prepared by the contractor for presentation in order to clear the goods through customs, and shall also provide the following exemption documents. Describe the necessary documents which the contractor will be unable to prepare. If exemption is not then granted, the custom duties payable and paid shall be reimbursed by the employer. All imported goods which are not incorporated or expended in connection with the works shall be exported on completion of the contract. If not exported, the goods will be assessed for duties as applicable to the goods involved in accordance with the laws of the country. However, exemption may not available for a. goods which are similar to those locally produced unless they are not available in sufficient quantities or are of a different standard to that which is necessary for the works, and b. any element of duty or tax inherent in the price of goods or services procured in the country which shall be deemed to be included in the accepted contract amount. Port dues co-deduce and accept as set out above any element of tax or duty inherent in the price of goods or services shall be deemed to be included in the accepted contract amount. Similarly, the guidance provides an example clause if the contractor is to be exempt from paying taxes. Example subclause on exemption from taxes. Expatriate means foreign personnel shall not be liable for income tax levied on the country on earnings paid in any foreign currency or for income tax levied on subsistence, rentals and similar services directly furnished by the contractor to contractor's personnel or for allowances in lieu. If any contractor's personnel have part of their earnings paid in the country in a foreign currency, they may export after the conclusion of their term of services on the works any balance remaining of their earnings paid in foreign currencies. The employer shall seek exemption for the purpose of this subclause. If it is not granted, the relevant taxes paid shall be reimbursed by the employer. Now let's see what's in subclause 14.1c. See, any quantities which may be set out in the bill of quantities or other schedules are estimated quantities and are not to be taken as the actual and correct quantities, one, of the works which the contractor is required to execute, or two, for the purpose of clause 12, measurement and evaluation. Unlike subclause 14.1a and b, guidance doesn't have any suggestion on this clause. It says that bill of quantities and other schedules are only estimates of the quantities. This clause came from the clause 55.1 of the FIDIC Red Book 4th edition, which is FIDIC 1987 version. In FIDIC 1987 version, clause 55.1 clause says, the quantities set out in the bill of quantities are the estimated quantities for the works, and they are not to be taken as the actual and correct quantities of the works to be executed by the contractor in fulfillment of his obligations under the contract. The quantities are not to be taken as the actual and correct quantities means that this contract is intended to be remeasurement. Errors in the bill of quantities will automatically corrected in their measurement process. It is important that the employers always perform a thorough check of the prices in the tender to ensure that errors have not included in the bill of quantities by the contractors in order to get a more competitive price. Because in FIDIC 99, if the measured quantity of the item is changed by more than 10% from the quantity of the item in the bill of quantities or other schedule, contractor can claim for a new rates and prices if certain other conditions are fulfilled. That is called automatic variations. It is also important to inform all tenderers that other last-minute adjustments in tenders to achieve a competitive price are not acceptable. Further, you cannot expect that even in FIDIC 87 version with clause 55.1, you can avoid paying new rates for the contractor. You can see the clause National Highways Authority of India versus Somdat Builders NCC, in which initially High Court decided that the contractor was not entitled for a new rate. But when appealed, court accepted that it has to be a new rate as the quantity had increased by 3 times, which is not normal. Again, if you delete clause 12 to make a lump sum contract, this subclause 14.1c 2 also has to remove. But that is only the second part of the subclause. In subclause 14.1d, it says D. The contractor shall submit to the engineer within 28 days after the commencement date a proposed breakdown of each lump sum price in the schedules. The engineer may take account of the breakdown when preparing payment certificates, but shall not be bound by it. Subclause 14.1d is based on Subclause 57.2 of the FIDIC 1987 version. In FIDIC 87 version it says, Clause 57.2, Breakdown of lump sum items. For the purpose of statements submitted in accordance with Subclause 60.1, the contractor shall submit to the engineer within 28 days after the receipt of the letter of acceptance a breakdown for each of the lump sum items contained in the tender. Such breakdowns shall be subject to the approval of the engineer. Both clauses are more or less similar, but the timing of submission is within 28 days after the commencement date in FIDIC 99, but in FIDIC 87 within 28 days after the receipt of the letter of acceptance. Under this subclause, it is contractor's obligation to provide the engineer with a proposed breakdown of each lump sum price in the schedules, unless there is another provision in the particular conditions. But the engineer shall not be bound by it. That means he may or may not take it into account when preparing the payment certificate. The purpose of this clause is to reduce any argument about the proportions of items included in the schedule as lump sums. Then the payments will reflect the distribution of the lump sums over the period of the contract. That is the end of part 2 of payment certification video series. In this video, we discussed subclause 14.1. We will start part 3 with subclause 14.2 in next videos. Please subscribe the channel to get notifications of new videos. Thank you.